In my latest Nio analysis videos, I got an overwhelming number of requests for a Nio financial analysis, where I look at the company's overall finances and the direction that Nio is going in. I said that if I got 400 likes, that I would do one, and 600 likes later on that video shows me that this is an analysis that you want to see. So stick around until the end, this could surprise you. Before we get into the video, if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get another 400 likes on this video, help me achieve that goal. Subscribe if you're new, hit the bell notification so you don't miss out on new content. I'm not a financial advisor, so always do your own due diligence. Now there's a lot to discuss, so let's get into it. Nio is not just an electric vehicle maker, Nio is much more than that. Nio is a pioneer in China's premium electric vehicle and technology market. They design, manufacture, and sell EVs whilst driving innovations in next generation technologies, autonomous driving, and artificial intelligence. Although Nio is mainly known as an electric vehicle company, I think it is more accurate to describe the company as a technology company. Similar as to how Elon Musk has repeatedly described Tesla. Tesla is a technology company that also makes EVs. And Nio is similar. And there are several arms to the Nio business model. Nio House, which has been expanding over the years, and now there is over 140. Nio Life. This is Nio's lifestyle brand where Nio is tapping into brand loyalty to sell an entire lifestyle to customers. Then we have Nio Power and Nio Service, which offers a power service system with chargeable, swappable, and upgradable batteries. This includes home charging stations, the Nio Power Charger, the Nio Power Swap stations, and the Nio Power Mobile system. And then finally we have Nio Phones and Nomi. Nio's advanced in-car AI assistant. It's a voice-activated AI digital companion for Nio owners. Now all of this combined is used to encourage brand loyalty with the cross-selling of products, which has so many benefits. Like they can cross-sell products to existing customers. A customer who buys a Nio EV for the first time, then perhaps buys a Nio phone. Brand loyalty can be a very powerful tool. And this means that they achieve additional revenue without spending a cent in additional costs. And this can continue and have a snowball effect where the consumers really buy into the brand and buy everything that the company has to offer. Now think of this from a financial point of view in very simple terms. Revenue goes up while costs come down. This is exactly what you want to see in any business, not just EV or technology and not just Nio. Any business that can increase revenue while decreasing costs is onto a winner. And a good example of this could be Apple, or a better example even being Samsung. Everybody knows Samsung makes phones, computers, watches, and TVs, etc. But they also make everything from microwaves to washing machines to vacuum cleaners. And I can nearly guarantee that anyone who has one of these products also has another product from the company and then will buy the next generation in the product line too. That is the power of brand loyalty, and that is the business model that Nio is going for. This is a very difficult task, but if Nio can achieve this, then the sky is the limit, or should I say the blue sky is the limit. Looking at the latest Nio financial statements, we can see that they have a very strong balance sheet. The company has total assets of $15.5 billion US and total liabilities of about $12 billion. Nio have cash and equivalents totaling $5.4 billion and also have short-term investments of $2.3 billion. So that's a very liquid $7.7 billion. In terms of liabilities, Nio have total liabilities of 12.3, and the largest liability being trade and notes payable of 4.1 billion. So overall, this is a very strong balance sheet. Looking at it from a macro point of view, assets in general outweigh liabilities, and current assets exceed current liabilities. So there is no near-term issues with liquidity or anything like that, and the total stockholder equity is $3.6 billion. So overall, it's a strong balance sheet, and with the stock currently having dropped to $4.08, it has now hit a 52-week low and the market cap has dropped to only $8.5 billion. So there is still quite a gulf between the NAV or net asset value of Nio and the market cap of Nio, considering that the market cap is more than 2 times the NAV valuation, but overall there is nothing majorly concerning about Nio's financials so far. Looking at the income statement of Nio, and this is where things start to get a little worrying. We can see here that Nio have increased revenue by about 10% year over year, with total revenue for the year of 7.8 billion. And although this is not bad, I would like to see higher revenue year over year in general in order to show that this is actually a growing company. But what is more concerning is the fact that costs are going up instead of down. Like Nio has been implementing cost cutting measures over the past year, but looking at the income statement, it is very difficult to see this being implemented. Cost of sales has increased by nearly 20%, which has resulted in Nio's gross profit being slashed to only $429 million. But it doesn't stop there. General expenses and R&D expenses have also gone up significantly year over year, meaning that Nio's overall losses are now bigger than ever. Now, to put this into perspective, and I'm not trying to be a bear here, I'm not trying to bash Nio, and I'm not trying to be bearish on Nio stock. I'm literally just pointing out the actual figures and trying to explain what this means for the company. But guys, this is a loss of $3 billion for just 1 year. Now, a lot of you know that I am bullish on Nio, but I have said it time and time again that companies can only make losses for so long. Eventually, they need to start showing a proof of concept, or at least start showing that losses can be narrowing. So many of you have been asking me in the comments, is Nio the real deal? And if it is, then why is the stock price always dropping? Well, these losses have a large part to play in that. Now, I know that Nio is expanding and that Nio is launching 2 new sub-brands and breaking into other markets, and that does explain a lot of the increasing expenses. But look at this. Look at where Nio is now compared to where Nio was 3 years ago. In 2021, EV was all the hype. And at the time, Tesla had hit an all-time high, with TSLA stock going up to over $400 per share. But Nio also hit crazy highs too, where Nio stock reached over $62 back in 2021. But look at the financial statements for that year. Nio had revenues of 5 billion, a gross profit of 1.1 billion, and a net loss of $600 million. Similarly, in 2022, revenue increased, but the gross profit actually went down to 745 million, and the net loss went up to 2.1 billion. And now the most recent financials show a worrying trend. Revenue has slowed, gross profit is down, and the net loss is bigger than ever at nearly $3 billion. Now, I've said it before, I feel that Nio has game-changing technology, but these losses cannot continue indefinitely. Like, this is crazy. This is a loss of $3 billion for a company with an equity valuation of only $3.6 billion. Or to make it clearer, the stock is currently just over $4, but these losses equate to a loss per share of $1.70 in just 1 year. Now, a lot of the expenses, in my opinion, have to do with the launch of Nio's sub-brands, and I will talk a bit about that in just a moment, but this cannot be ignored. Nio sales so far in 2024 have been terrible. Just like last year, Q1 has not been good at all. But hopefully Nio sales will pick up, or else it's going to get very worrying for the stock. Now, it must be noted that a lot of EV brands are having the same issues. Tesla, Li Auto, Xpeng. Sales figures are down so far for each of these. But where a company the size of Tesla can absorb this to some degree, the likes of Nio and Xpeng and Li Auto won't be able to continue like this for too long. And we can see here that while each of these have been struggling for sales, one manufacturer has been stealing the entire market. BYD now have close to 40% of the entire Chinese market, and have been very aggressive in their expansion into other countries too. In fact, BYD are now the biggest EV company in the world, far outselling even Tesla on a global scale. But then the very latest news is that Nio's Onvo L60 has appeared in real life without camouflage. An image of the Onvo L60 has been circulating in WeChat and Weibo, possibly because Nio has started shooting promotional videos. Now, this is the first time that we have seen a clear image of the Onvo L60 after seeing it several times wrapped in camouflage over the past few months. This will debut in the second quarter, with the first product launching in the third quarter and mass deliveries beginning in the fourth quarter of this year, with William Lee confirming that Nio's second brand will prioritize deliveries over gross margins. So I do wonder what effect this launch will have on Nio's current financial situation. On one hand, this will surely increase revenue, but on the other hand, Nio are not focusing on gross margins at a time when they really need to be focused on cutting their losses. Then again, Nio are well backed, which I have spoke about before, so maybe William Lee feels that Nio has nothing to worry about financially. What do you think? Do Nio need to start focusing on improving margins, or will China bail Nio out no matter what the company does? And if you want to see an analysis of Nio with future predictions and my price target for the next few years, then drop a comment below. As soon as I get 400 likes on this video, I will do a Nio analysis with my price prediction for the next 5 years. Nio does have a lot of promise and game-changing technology, but there is also a lot to be concerned about too. This, of course, is just my opinion. It is not financial advice, so always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter, and I'll catch you in the next video.